Hello everyone, welcome to today's video. I am your host Nikos Zabouras, Senior Market Specialist at FXCM. Today we will be talking about two legacy entertainment companies, Paramount and Warner Bros. Since Paramount released its Q2 results on Monday, after US markets closed, and Warner Bros. Had done so a week earlier. Now, streaming was, of course, in the spotlight in overall somewhat mixed reports. The studio segments of both suffered from unfavorable year-over-year comparisons, but Warner actually rides high on the box office success of Barbie. And Paramount things are better during the current quarter as well, the Q3, since the latest installment of Mission Impossible franchise starring Tom Cruise is also doing well, not as well as Barbie, of course, both of which are during the Q3 and not the reported Q2. Just to timestamp this video, it is being recorded on Tuesday, August 8th. And before we go ahead and discuss all of that, please read carefully through the risk warnings and the disclaimers. Once again, please go over through the risk warnings and the disclaimers carefully, and bear in mind that anything discussed in this video does not constitute investment advice and should not be construed as such. Okay, let's get the ball rolling. So we're gonna start off with the overall financials of how both companies did in Q2. Then we're gonna go to the studio business, and then we're gonna focus more on streamings before we also talk a little bit about their stock performance. So Paramount registered a small decline in revenues, 2% as you can see, while losses narrowed significantly from Q1, from the previous quarter, to currently to 50 million. Warner did better in terms of revenues because they increased significantly, 14% year over year, but the company operated at a loss of 900 million, which was much wider than Q1. Again, that's on a sequential basis, not year over year, same as not year over year as with the revenues. Okay, there's not so much to say about the financial themselves. Relatively good, but some issues obviously there. But now let's go ahead and how the studio segment did, which is the segment that creates and distributes movies, TV shows, etc. Now, as we already said, both suffered in the second quarter, and revenues slumped compared to a year ago for both, as you can see, and significantly so. However, this year-over-year comparison is very unfavorable. During the same quarter of 2002, Paramount had released Top Gun 2, starring Tom Cruise, which was a huge success. It was the second grossing film of 2022, and many said that it sort of saved cinemas as it brought people back with excitement following, of course, the pandemic problems. This quarter, it didn't really had, in Q2 actually of this year, didn't really have any major movie out, while the last movie of the Mission Impossible franchise, again starring Tom Cruise, has performed quite well, but it was released in the third quarter. Of course, Tom Cruise is always a huge driver for Paramount. As I like to say, Disney has the Marvel Cinematic Universe, and Paramount has the Tom Cruise universe. Now over to Warner. Similarly, last year it had the Batman, same quarter last year, Q2, starring Robert Pattinson, but it did not have any success in this quarter. It did release the Flash of the DC Comics franchise, with which, of course, Warner has generally struggled, and The Flash was a box office flop. And similarly, in late March, it had released Shazam, the second installment of Shazam, which also did not do well. Now, things have changed in the current quarter, though, not part of the results we're talking about. In the current Q3 quarter, it has Barbie, the Mattel toy doll, let's say, and the relevant movie was released in the current third quarter, and it's a runaway success, big box office hit, and the company rides high on this success. And now let's move to the increasingly important streaming business, or direct to consumer, as these companies and others such as Disney call it. Paramount did much better here with impressive segment financial, but also subscriber growth, which increased by 700K members. And the company also incorporated Showtime into its Paramount Plus streaming service in late June, both of which combined costs in the US nearly $12 per month. And you can see, of course, how both advertising revenue and total revenue did very well. Warner Bros. Has a bigger user base, as you can see. But it actually lost 1.8 million members in Q2. During the reported quarter, it had unveiled a new flagship streaming service called Max, starting at $9.99 a month in the US. And of course, and that shows how pivotal how important the segment is in the push that Warner is making into the direct-to-consumer segment, and financials were also good year over year. Now, Warner is a much bigger player, mostly because of HBO, I would say, which is the perennial success story of the TV industry, with content that is both fan-loved and critically acclaimed. Of course, none of Paramount nor Warner can actually compare with the streaming leaders Netflix and Disney, both of which have more than 2 million users. Now, we also had recently the Emmy nominations for the September Awards. Both did really well. Of course, Warner's HBO and Max did very, very well. Of course, the critically acclaimed drama series Succession and the video game based The Last of Us stood out, starring Pedro Pascal, the latter, and these were some of the most successful content this year on the Warner Bros. Streaming platforms, Warner Bros. Discovery. Now, let's sum things up and also talk a little bit about the stocks of Paramount and Warner. Results were generally encouraging, but there were also reasons for concerns. Paramount stock rose in extended trading after the report, also helped, of course, by the news that it sold publishing house Simon & Schuster. Overall, it's having a mixed year, and let's actually now shift to the stock. Let's start with Paramount. So as I said, overall it's having a mixed year, but has stabilized after the slump from the Q1 results. Market had reacted very negatively. You can see it here, we have highlighted, but has stabilized since. It has been contained, however, on the upside by the 38.2% Fibonacci of the May high, May low drop, and that does create, that keeps it in a vulnerable state. Now, Warner, the stock of Warner Bros. Discovery had risen last week after the results. You can see it here, and is also boosted, of course, by the Barbie movie success. The stock has been performing better compared to Paramount this year and runs its third straight profitable month, trying for fresh 2023 highs, which are located at 16.29. However, we can see on the bottom of our screen that the RSI points to overbought conditions, moves to overbought territory, and that could contain the stock from a technical perspective. That's sort of a brief comment on the technicals. However, that's not the main focus of this video. It was mostly to analyze the results and what to expect from here on. Overall, I think that streaming will be an important factor for both companies, and progress, of course, on the market, which of course is dominated by Disney and Netflix. So that's pretty much it from me for today. Thank you for joining.